Hello, everybody. Welcome to this webinar from the University of Hamburg, the Law, Finance and Technology Group. We're delighted to have with us today Professor Douglas Arner from University of Hong Kong. He's one of those persons who really doesn't need an introduction, a leading scholar worldwide in all areas of financial regulation. And the subject that he's covering today is extremely timely and topical. He's going to speak about digital finance after COVID-19. That implies, Douglas, by the way, that there will be an after, hopefully at some point very soon. We're very excited to have you with us, and we look forward to your thoughts. The rules of the game are that Douglas will speak for about 20 minutes, and then there is ample time for discussion. If you'd like to have anything to be raised during the talk, then it's the best idea to send me a quick message through the chat, and then I'll try to build it in. But if not, we keep most of the questions for afterwards. That's it. Over to you, Douglas.
Thanks, Georg, and thanks to the whole team for putting this all together, and thanks to everyone for joining today. Yeah, I think the Hong Kong experience is suggesting that there may be hope, though while just about everything else is reopened here, travel is not reopened. And so I think what we're likely facing is at least a period where things are definitely not how they were before. And I think in many ways the question that is very much open and that I'm not going to be able to answer today is how things look after that period when they're definitely not like they were before. I'm going to share my screen here. I've got a few slides, and if you want copies of these, feel free to email the team in Hamburg, and they can happily provide them. You know, I think when we look at this, the starting point is really around this question of what have we been dealing with? And so, you know, we've started with this situation where we've had a crisis that is mainly a human and health crisis that has definitely resulted in an economic crisis. One of the big questions right now is what the impact of over a longer term of that economic crisis looks like. And in many ways, with what happens in the context of the economic impact really determines what happens from the standpoint of the financial sector impact. So I think what we can see is that initially, we were looking at a situation where everyone expected essentially a short, sharp economic crisis and a very rapid recovery after that. The economists are calling it a V-shape. And in that sort of context, because it's essentially a health crisis, you're trying to minimize the economic impact, and you're using the financial sector to do so, which means first, making sure that nothing breaks. The payment system works, the security systems work, intermediaries don't fail, regulators, despite working from home, etc., continue to work. And so really you're focused largely from a financial sector standpoint on liquidity at the outset. And so the hope would be that if you can provide sufficient liquidity, it prevents the health crisis from turning into a financial crisis or from turning into an economic crisis, which then becomes a financial crisis. And I think what we can definitely conclude at this stage is first, that this crisis has had a big impact everywhere, from the first phase in China to the second phase across East Asia to the third phase across Europe, the fourth phase across North America, and increasingly what I would characterize as the fifth phase across developing countries. One of the big impacts so far has really been on digitization. Digitization has been driven by the needs of e-commerce by lockdowns. It's been driven by the necessities of health tech applications, of communication, of ed tech. All of these things have meant that we have seen a very rapid digitization of just about everything. I think a general conclusion that where those digital tools have been more available, the mechanisms for supporting lockdowns or a health response or communications or tech, all of these things have done better. And that's, I think, something that we'll come back to. From the financial standpoint, a point that I think is always very important to make is that this is definitely not similar to the 2008 financial crisis. 2008 was a crisis that originated in the financial sector and moved into the wider economy with a global impact. So far, the financial sector has not been really the source of our problems, but rather, and particularly digital finance, has been one of our mechanisms to try to address the health and economic side of the crisis. From a financial sector standpoint, though, the longer this goes on, the more it becomes a question of, are we moving from a short liquidity shock to a longer-term solvency question? And what I mean by that is that the longer the situation goes on, the more likely that you are facing questions of structural change in the economy, which means that certain industries, firms, etc., are not facing a liquidity crisis, they're facing a solvency crisis. And if basically you are continuing to channel financial resources via the financial system and the government into firms or industries which are facing structural change, then you have the very real risk going forward of turning essentially a liquidity crisis into a longer-term financial sector solvency crisis. And in fact, in the context of a range of governments, particularly the developing country governments that are now facing this fifth wave of the crisis, I think the potential for not only financial solvency crisis, economic sort of concerns, but potentially sovereign debt solvency issues as well, as governments find that resources that have been channeled have failed. And essentially, the framework that we're using for this is this 1919 or is it 1929? And I think this is really the big question right now. We have lots of economies that are struggling to reopen as quickly as possible. In East Asia has probably sort of led the way. We're now seeing Europe getting ready to try the same sort of thing over the summer. The US didn't really close, as has often been the case with a number of developing countries. And so 1919, our scenario is essentially one where you were coming out of the First World War, you had the Spanish flu, and at the end of 2019, the world wanted to get back to how it was before the First World War and the Spanish flu as quickly as possible. And so even though it was an extended conflict and pandemic, the reality was that people wanted to get back to how it was as quickly as possible. And so that's one scenario. And of course, the scenario is that then you get what turns into the 1920s, which of course is a serious boom decade in most places. But of course, it all ends rather badly. And that is, I think, the second part of the story. Or is this 1929? In other words, are we facing structural changes? And for me, in some ways, the canary in the coal mine industry to look at is going to be airlines. If this is 1919, Warren Buffett is wrong, and airlines are going to bounce back very, very quickly. We're all going to be back on airplanes as soon as possible. And I think it's going to be interesting to see Europe's experience with this over the summer. Or is it 1929? And if it's 1929, the airlines aren't coming back, and Warren Buffett is right, and all of those loans and bonds that have been raised by those airlines, all of the government bailouts, are going to result in a very structurally different industry as this crisis goes forward. And I think that, from the standpoint of where we are today, is really the unknown state. I think from the bigger picture question, what we do know, or trying to put a framework on what we do and what we don't know, my co-authors and I essentially identify three major trends impacting finance in the 1990s, in the 2020s. The first of those is technology. The second of those is sustainability. And the third of those is a tension between globalization and fragmentation. And I think in each of these, the COVID-19 crisis is very much a harbinger of the sorts of things that we're likely to see going forward. I think from the technology standpoint, the big thing that we're seeing in the current crisis, but also a trend that has been going on in recent years, is that technology is no longer a constraint in an increasing range of cases. I think the best example of this from last year was Facebook's proposal for Libra. Libra was a ground-changing proposal. Essentially, it highlighted that the technology was there to fundamentally change the world of money, the world of finance, the world of sovereign financial and economic relationships. And it obviously got a very strong response from major countries, central banks, and regulators around the world, resulting in a very different picture. You know, I think coming out of this crisis, what we have seen is that particularly the role of digital from the standpoint of big tech, the role of big tech highlights just how significant, dominant, in an increasing range of systems, the biggest tech firms are, where an Alibaba or an Amazon becomes essentially essential infrastructure in an increasing range of economies. And that highlights a very different world where you are looking at private companies, which have essentially become core to the overall function of every aspect of an economy. So I think when we're thinking about technology, these were trends that were already developing, but the COVID-19 crisis has accelerated this digitization trend, and it's very much highlighted the potential for tech to have a particularly transformative impact going forward. The second is really around sustainability. So if we think about this, it's unlikely to be the last pandemic, but more than that, it's unlikely to be the last sustainability crisis. Basically, COVID-19 in many ways is an existential crisis, but I think from a sustainability standpoint, we're likely to see a series of future existential crises. And from that standpoint, really, the question is it possible to use the response to this crisis to build better systems which may help us deal with future crises going forward? And of course, I think we are already dealing with questions around a tension between globalization and fragmentation. These have been highlighted by the Brexit process, by the US-China trade war. But I think the tensions that we've seen amongst major economies, particularly if we think of US-China, but also the fact that that puts everybody else in an increasingly complex position, means that from a globalization fragmentation standpoint, we are looking at the possibility of a very different world of regional blocks, both from a financial and economic standpoint, as well as potentially from a digital finance standpoint. Now, this idea of technology being a constraint, or some of the things that were trending, I want to pick up two particular aspects where I think we're seeing some of the biggest changes. The first is in the context of market integrity systems, and the second is really around electronic payment systems. So I think if we think of this idea of market integrity, basically our existing AML system is largely what I would describe as an analog framework. It's designed around the technological horizons of the 1970s, which basically meant that the financial sector was our key mechanism for monitoring and enforcing criminal use of the financial system. And I think one of the big things that's coming out of this crisis is an increasing consensus that one, that system doesn't work very well, and two, that technology allows us potentially to design a better system. And some of these discussions are very much live in the context of the EU in particular right now. But I've highlighted a series of pieces from the FATF that I think really show a change in attitude. The first, highlighting risks around COVID-19 from an AML standpoint and supporting electronic and digital payment. The second, a president's statement from the FATF president in April of 2020. And I think the key phrase here is that the FATF encourages the use of technology, including fintech, regtech, and souptech, to the fullest extent possible. In particular, the FATF calls on countries to explore using digital identity as appropriate to aid financial transactions while managing money laundering and terrorist financing risks. And the key, this really builds on some digital identity guidance from the FATF in March 2020, which basically says that a sovereign digital identity system, like the eIDS system, for instance, should be viewed at least as well from a financial industry or a regulatory standpoint as traditional sovereign forms of physical ID. After all, a sovereign digital biometric ID is actually probably better at identifying a person than a sovereign paper-based ID, where you have all sorts of potential issues. And so what I think we're seeing increasingly is discussions around how we can use technology coming out of this crisis to build better systems. And in particular, the crisis is driving a necessity by governments to figure out ways to bring people into the financial system as quickly as possible. And that means differentiating in a real way for the first time low risk individual accounts by average people being supported by government transfer payments from other things that are much more complicated. And in particular, how can these sorts of systems going forward relate to existing or newly built golden sources of government data? And I think from the standpoint of this data question, we're likely to see very different models evolving from China to the US to the EU. The second area that I would highlight is really around payments. And there are a lot, basically every central bank and government around the world is trying to figure out how can they essentially get resources as quickly as possible from both the liquidity and the economic standpoint to individuals and businesses around the economy. And what that is doing is driving real efforts from the standpoint of figuring out how to build interlinked payment systems, national interoperable payment systems, bridging whatever existing systems there may be. And the result of this is an increasing range of discussions around the possibility of whether or not that means not only looking at electronic payments, but actually looking at deeper mechanisms, looking at things like central bank digital currencies, and thinking about whether or not some of the spending in terms of resources that is taking place around the world in the context of this crisis, whether or not some of it, one, might be directed in terms of infrastructure that potentially has a benefit going forward. both from the standpoint of not just this crisis, but other crises going forward, but also from the wider standpoint of building better financial systems to support financial inclusion and sustainable development. So I think if we think about these discussions, some work that my team and I have focused on has looked at this question of what sort of digital financial infrastructure really makes a difference from the standpoint of financial inclusion, from the standpoint of the sustainable development goals. And our conclusion really focuses on four pieces: a combination of digital identification systems, particularly sovereign digital identification systems, combined with frameworks for simplified account opening for the majority of populations so that you can differentiate between simple cases and more complex cases, and combining that with open access interoperable payment systems. Our conclusion is that this combination provides the infrastructure for digitization of effectively any form of government payment or transfer, from salary payments to pregnant mothers, to transfers to individuals in the context of COVID-19. And so it provides a framework that allows better, more effective ways of supporting financial activity from a governmental standpoint, but also from a private sector standpoint. It reduces the cost of customer acquisition, which allows the development of commercial opportunities which were not viable without this sort of cost-reducing infrastructure. So the suggestion is that if we are increasingly looking forward in the context of payment systems, we are building data frameworks. This next step for governments would really be to think about how to put the pieces together. We're at the moment in the process of a project where we're investigating not only the impact on financial inclusion, but across the SDGs, and working with a range of governments in the context of building these sorts of systems going forward. But it has to be said, and I think this is one of the biggest aspects coming out of the digital drive that the COVID-19 crisis is making happen everywhere, and that is an increase in what we call tech risks. Tech risks are cybersecurity, it's data issues around data protection, data security, data privacy, it's around infrastructure. Of course, we've seen questions around the internet, but this in particular relates to cloud systems and also data provision. And finally, how we deal with coming out of the creation of essentially very large big techs that make it very difficult for new entrants to compete with going forward. How do we break up the sorts of systems that we've had to create from a private sector standpoint going forward? So what I've tried to do is highlight quite a lot of different issues, highlighting, I think, what we're seeing from the standpoint of the COVID crisis, which is first, that different countries are coming out of it at different stages, and we don't know exactly what the world is going to look like a few months or a year or two down the road. One thing that we can definitely say is that the crisis is dramatically increasing digitization, and in particular driving accumulations of data, but also driving a variety of forms of electronic payment systems. Going forward, I think we can say that big picture, we're going to be seeing these trends playing out across big technological impacts, across sustainability, and whether or not we can use this crisis to build a better framework to prepare for not only the next one, but also to support more sustainable development going forward. And finally, the real question in terms of global geopolitics around relationships between major economies in particular, and the impact that has from the standpoint of globalization versus fragmentation. So thanks for taking the time, and yeah, looking forward to our discussion now.
Thanks so much, Douglas. That was terrific and a fantastic overview of these issues. It's somehow reassuring to have this little optimistic note in your in your assessment of the situation. I take the prerogative as a moderator to push you a little bit on the first point. So one sentence that I remember from the first part of your talk is that this optimistic note that tech will help us to build better systems. And when I look at what's happening right now, for example, in Europe, is that, for example, these corona tracing apps, right, that are coming out everywhere. I'm sure you've had them in Asia for a long time already, but they're now being developed by, the German government just today published its corona tracing app. Now we're mid-June. But what's most remarkable in my eyes is that every country has its own tracing app, right? And it's a sort of national thing that every country cooks its own soup, and they don't seem to be very compatible across borders. So for me, that's a sort of point where I hesitate to believe in the sort of big global picture solution that will really develop the system in a technological way that can cross borders, right? And that's one example. There are plenty of other examples. What's your view on that?
Yeah, I think that's fair. And if I'm honest, my my sort of central scenario at this stage is a world made up of increasingly fragmented blocks around major economies, which is differentiated in some ways via technology and approaches. And so that's something we can come back to. But I think another point you have in there is this idea that I think the downside of digitization that has really been accelerated by the crisis is, one, the tech risks, but two, it's really around how does the data get used going forward. And I think this is something where there are an increasing range of concerns in individual countries. And I think we're going to have really quite different approaches to that going forward. And I think the third point, which is really this specific question of cross-border tech, I think you're exactly right. And what I kind of look at in many ways, as I said, is this sort of travel canary. In other words, a sort of best solution would be that you come up with essentially an international approach, which not necessarily even on the tracking and tracing apps, but just from the standpoint of cross-border testing and travel requirements. In other words, right now, we're at a situation where as travel does reconnect, at least in the EU, you have sort of a common approach. But once you begin looking across borders, you can basically say that different countries, everybody is going to have at this point different testing requirements. Some countries aren't going to require tests. Some countries are going to require a test like this. Another is going to require a different test. And how are you in one place actually going to manage to get access to the different tests that you might need to go to different places? Basically, that's fragmentation from a technological standpoint. And I think that even in that area where the most obvious sort of possibility of cooperation exists, common approaches to tests on departure arrival, that not much progress is happening. And so, yeah, I think we can look at this from a number of different angles. At my perspective, probably the downsides are in most cases outweighing the possibilities on the upside.
Great. Okay, thanks so much. I would like to open it up now for discussion for everybody. Feel free to switch on your screens if you like. You don't have to, obviously. This is all a nice, relaxed format, but it would be nice to see you at least when you ask your question. And there are different ways of doing this. You can either use the chat function. There's also a Q&A function somewhere in Zoom, or you could, third possibility, use the raise your hand thing which is just below the participants list, somehow just raise my attention, and I will try to moderate. As a first question, I have Armin Schwimbacher. Would you like to come in, Armin?
Okay, thanks. So sorry, I didn't want to push myself on the front line of the questions, but it seems I was the only person who used the chat box during your presentation. So thanks, Douglas, for this presentation. I think it's very inspiring, and I think you made a very good point that many of the technologies will accelerate. At the same time, many of these things like identity, digital currencies, payment services, they were there already before. So you're making a case that it's going to accelerate everything. I just wonder whether there is something you can think of that is unique to the COVID-19 crisis and that we wouldn't have seen without it. Because in some sense, you can make some parallel to the financial crisis in 2008, where people were saying, it's going to make things accelerate or exist. And there we had a bit of the same discussion, because it's also a time where some technologies were there, like crowdfunding, blockchain started. So it just happened that be there. And it's difficult then to say it created this, because the technology was ready just at that point in time. So is it really only about accelerating existing things we have started? Or is there really something unique in the crisis that will generate some new areas of fintech that we wouldn't have seen without them?
Yeah, I think that's a really interesting question, and I think most of the things we're seeing, it is an acceleration or an incentive. So, if we think of, for instance, central bank digital currencies, it's something where already really as a result of Libra, things were moving forward. But I think COVID-19 has pushed that forward. If we think of sort of the role of big tech, this is something that we were already talking about, but this has pushed it forward. If we think of the globalization fragmentation, it was already a tension, but definitely this crisis and some of the individuals involved have taken it to entirely new heights from what we were seeing beforehand. I think in the context of say the AML discussions, the discussions were there, but nothing, but they were not quite to the stage where they would be pushed over the edge. I guess the things that in some ways are different is the potentially existential nature of this crisis. In other words, it doesn't look like that at this stage, but this is the sort of crisis where it's more than just a financial crisis. It's more than an economic crisis. It's a sort of potentially existential crisis in a way that we really haven't seen, probably since the first part of the 20th century. If we think of the two world wars and the Great Depression, those were existential crises. And we really haven't seen an existential crisis like that. And this doesn't seem like it's quite going to reach that level, but that's an optimistic view. There are still people out there who would say that the potential is much worse. So I think from my standpoint, that's probably the big thing that is different this time, is that this, whether or not it turns out to have truly been an existential crisis, is the first sort of existential crisis that we've seen in a long time. And that is one reason why I throw out the 1919 versus 1929, because I do think that we're looking at a number of other potentially existential crises, from the geopolitical side to the sustainability side, And that is something that this crisis is potentially the predecessor of. So yeah, that would be my view at this point. From the digital standpoint, I think we haven't quite seen anything yet that is completely new and different. An acceleration in terms of datafication processes, an acceleration in terms of digitization processes. The one side that could be that is to the extent that one could see a sort of combination of an isolated internet system with a central bank digital currency with a sort of national blockchain environment as a potentially self-sufficient digital environment, which could provide an alternative outside of the existing sort of dollar Western internet-based system. That would be something that hasn't come out, but could and would be, I think, something different.
Great, thank you. Give over the word to Carsten Wenzler.
Yeah, thank you very much. I found the presentation really interesting, especially the discussion on the FATF, because the FATF has always been really skeptical about how fintechs deal with money laundering and etc. And it's quite interesting that they have this very quick shift of policies. So in my research, I'm looking at IOSCO as well and trying to see how whether they change, and they are just really in the early stages of this. But what I find interesting, continuing from the discussions with what Armin just raised, it's within few weeks, sometimes even like less than 3 weeks, governments decided to partner up with digital lenders, and on a massive scale. I mean, there's France, there's Netherlands, there's the UK now. So a lot of these platforms are, of course, small enough to be considered a systemic risk or anything. But it seems the attitude of governments, at least for time being, is that these fintechs and what they do to provide better access to finance are positive, and they don't see it as a problem, and they don't stricten the liquidity requirements or anything like that, which I find quite interesting. So that's I just wanted to raise this as a topic, whether or not maybe the difference to 2009 and other crises is how quick governments were able to use fintech services to implement the policy goals that they had.
Yeah, fantastic. And actually, there are three things in there that I'd love to pick up on. The first is, on the FATF side, and it actually goes back to Armin's point, the FATF was moving in this direction. I mean, you had already a UN study that was basically showing how the existing system wasn't very effective. You had obviously a general recognition in the financial services industry that the cost versus effectiveness balance wasn't very good. Probably very importantly, you have had over the past 5 years or so an increasing level of comfort in the law enforcement community with digital. And I think that's really hugely important, because the sort of money laundering side was much more conservative. And what we've seen with this increase in digitization is that, amongst everything else, the greatest growth area for crime over the past decade, and certainly right now, is digital. And so if we think of Interpol, Europol, major law enforcement everywhere around the world, they've been increasingly grappling with this. And what they found is that many of the digital systems are actually really useful in the context of tracking and tracing money, a different sort of tracking and tracing system. And so I think what the crisis did is it did have a tipping point. It basically finally pushed those over the edge where, 2 years ago, I could go into an event and say the system isn't broken, we can rebuild it. And the industry would basically stare stony-faced because they couldn't say anything, because if they said anything, they would immediately get accused of self-interest. The regulators didn't want to say anything because they had built the entire system, and they didn't want to be accused of having built a bad system. And what has changed now is one sort of says that, and you get nods from the regulators, and then the industry nods too. And that's, I think, really important. I think your point about IOSCO is right. All of the international regulatory organizations are grappling with this. We've seen from the G20, probably the FSB and the BIS have been the ones that have been most direct because they're the ones most directly associated with central banks. IOSCO has probably been a little bit more slow, and perhaps it's also because IOSCO's sort of secretariat is based in Madrid. And so that definitely would have had an impact on their operations. But I think IOSCO, of course, is not the same sort of crisis-based regulator as some of the others. The FSB, G20 really kind of crisis focus, and so it's a more natural response. And so I think IOSCO going forward is going to be picking up an increasing role as we look at digitization. I finally think your last point about the fintechs and systemic risk is really exactly right. That's, if we think of the big differences between 2008 and 2020, the first is that in 2008 it was a financial crisis, the financial sector was the problem. 2020, it's not primarily so far a financial crisis. The financial industry has been helping in the context of the crisis. The other, I think, is really from the standpoint of technology. And when I make that statement about technology no longer being a constraint, what I mean is technology has come since 2008 to today a very, very long way. You know, 2007, we were looking at the first iPhone had just come out. M-Pesa had just been launched in Kenya. And so the thinking of creating something like a Libra was just, you know, even if you think about the initial Bitcoin, the reality of doing something like Libra was just science fiction in 2008. And the reality today is that the technology is generally not the constraint. The technology is generally there from the standpoint of what we might want to do in the financial sector. It's really a question of whether or not we think it's a good idea or not. And yeah, I think it's, at the moment, everyone from the governmental standpoint is just trying to marshal every resource they can find from the financial sector to get money more quickly to where it's needed. And I think it's only as we see how this crisis plays out over time that we're going to see what that matters. In other words, there will be an impact in the context of NPLs and solvency, but it's something that we're going to have to monitor very, very carefully, because if this moves from being a liquidity crisis to a solvency crisis, then we're looking at a very different sort of problem and a very different sort of response. But clearly, coming out of this, I think we're going to need to think very carefully about, you know, the financial sector in 2020 is having some real positive impact as compared to 2008, when there was pretty much nothing that one could say positive about the financial system. And I think that could be something that comes out of this, is a new discussion about how we can use the financial system for beneficial purposes going forward.
Again, super great, optimistic. I love that. Thanks, Douglas. Yeah. Next on the list is Grigory Pustovit. Sorry for mispronouncing.
Good afternoon. Yes, you're correct. My name is Grigory Pustovit, and I'm a PhD candidate at Goethe University Frankfurt. And I would like to thank you for organizing this insightful seminar. And I have a question. Taking into account that currently we observe a massive support coming from different states actually, to various sectors, including financial sectors, I have two questions. First of them, whether fintech is actually getting any help, and does it need any help from the state? Because as we learned today, it can solve some problems, some very important problems. And the second question, just because the legacy financial sector is getting some state support, would it mean that by this we're actually postponing the comeback of fintech and the acceleration of the fintech development? Thank you.
Yeah, once again, two really good questions. And I think if we look at this question from the standpoint of fintech getting help, I think we have to divide it in two different directions. One is really from the standpoint of digital finance and technology in digital finance. And that is definitely getting a boost from this crisis. There's no question there. But the other question is really from the standpoint of fintechs as startups, as small new entrants, et cetera. And I think what we're seeing in any crisis, the larger, more established players, because they tend to have more financial resources and access to resources, have an advantage in surviving a crisis. Smaller firms tend to have less resources, and as a result, they tend to fail more quickly in any sort of economic crisis. And that's actually a big picture concern, because the longer this goes on, if we end up more and more small businesses fail, what you end up with is even greater concentration amongst the larger players, which from a standpoint of innovation going forward is problematic. So I think, one, there's this question about startups generally. Are we providing sufficient assistance? And I think this is something that we're seeing a variety of governments taking very different approaches. And a lot depends on how their financial system works, how their payment system works, and whether the financial system and the payment system give them effective mechanisms to channel resources to entrepreneurs and small businesses. And there's a lot of variation around countries. So I'll leave it at that. But on the fintech side, what we are seeing are a number of countries that are actually doing a number of packages that are specifically targeted at fintechs or fintechs and other tech startups. The view being that if you think of the medium term from the standpoint of the growth of your economy, you need the new tech startups as a way to energize innovation, jobs, development going forward. So how can you actually get resources to those firms in particular, because they may be the ones that matter the most going forward? And we have a range of efforts between sort of direct payments to R&D mechanisms to payments for staff. And I think probably we're seeing a greater emphasis in some of the financial centers. Singapore has been very aggressive in coming up with packages directed at the fintech industry. And I think lots of countries have looked at the sorts of packages they've come up with and said, well, maybe we should do something else. And certainly working with fintech startups, they're running into the same startup problems as everyone else, but there are certain areas of fintech business that have gotten a real boost. If we think of day trading, securities trading, digital asset management, pretty much everywhere in the world, the fintech community has seen an explosion in the amount of online trading business that they're doing. So there's a real difference depending on what it is that you're doing and what sort of business. And I think a real difference between countries in terms of how to try to direct support to startups, and in particular tech startups, and a few cases where we've actually seen efforts like Singapore or in Hong Kong as well to direct resources directly to fintech startups. And I guess the second question is this question about I'll make it quick, Georg. will the support to the legacy financial sector hold back fintechs? And I don't really think so. I think the digital transformation is meaning that the big techs are entering the transformation that is taking place in traditional financial services has accelerated, and if anything, that's opening new opportunities from the fintech startup side. So that one's probably more in Georg's optimistic category, whereas the first question a little bit less so.
Excellent. Okay, so I have a couple of people in the queue. Maybe because time is flying, we collect a couple of questions and then you can take them together and pick and choose what you... So the first one comes from Alessio Azzuti, but I think he has a technical problem. So would you like me to read it out for you, Alessio? Yeah, okay.
I think that's a yes.
Okay, so...
Can you hear me this way?
Oh, okay. Say something.
Oh, all right. Maybe you can hear me now.
Yes, we can. Yeah,
I cannot type directly, but I can speak then. Yeah, I really do. Thank you, Professor, for the enlightening talk. And my question really care about the governance of technology at international level in a coordinated way. Indeed, especially in the field of monetary order. Let me do a step back first. This crisis, I think, comes already in a complicated scenario, where technology already raised many ethical and legal questions, plus we were in a 10 years recession period without any end. I think that the real message and lesson to learn from the pandemic is that to global problems, issues, we should have a global answers for the future of sustainable future in the planet. So the question is, what would be the risk of an uncoordinated development of technology, geopolitically speaking, but also in internal dimensions of the jurisdictions? Could also become a coercive instrument in the hands of governments on the citizens, in my opinion. So, what do you need? What do we need at international level? Something like a big agreement? I don't know.
Okay, let's collect. Second is Christopher Ruoff.
Thanks, Georg, and thanks, Professor Arner, for the fascinating presentation. I'm wondering, so currently there's much debate about the distributional effects of the crisis. So we see that it has a disproportionate effect on the poorer part of the society, while monetary and fiscal measures arguably have a stronger effect on the upper part due to asset price inflation, etc. So economic impacts of crisis and of the measures is disproportional, arguably. And do you think digitization or digital finance and the structural shifts that you described can in a way overcome this, or is it another factor that once more exacerbate this dynamic? And maybe there's also a difference between short-term and long-term effects. Or, I don't know.
Okay, and then I have Otari Kachice. Sorry again for mispronouncing.
I'll try to be very, very brief. So in case of this fragmentation scenario and the fragmentation possibility that was pointed out in the presentation, how would you see the interaction between the fragments models if that happens? Cheers.
Okay, and final question from Pedro Batista.
Yeah, so many questions, but mine is related to a couple that was preceding. So it's back again to your conclusion on fragmentation, globalization. And then I want to question that if it's necessary one or the other. Like one of the drivers that I have seen in the digitalization is that it's reducing transactional costs overall, organizational costs, regulatory costs, and so on. So couldn't we see like differently from I have seen like part of the bibliography on RegTech. I saw that a couple of your slides were on the topic, but you skipped. So I was curious about those parts. The RegTech, they kind of say that a task for the government could be to harmonize more, to make it easier for the emergency of RegTech, But then in my perspective, kind of, in my view, it defeats the purpose of RegTech. Now, if RegTech is a mechanism to assist you to cope with technology and to cope with regulation and the changes in regulation, one would be like, why do you necessarily have to make it easier for them to do so if they are already assisting you in that? So I kind of was trying to imagine if with this more digitalization, reducing those costs, couldn't we see a bit of that, like a more globalized economy and finance in a world of more legal fragmentation as well? So the legal fragmentation wouldn't be that big of an issue if we have these systems of coping with those chains. Yeah.
Okay,
Yeah,
lots of questions. Off you go, Douglas.
Yeah, I'm going to start with the distributional impacts, and I think that's something that we know in any crisis. It's not only the poor, already disadvantaged members of any society, but it's also the poorer countries that get impacted more by the crisis. And we're seeing that on an ongoing basis in this case. I think, the optimistic point is really the suggestion that, at least from the sort of financial inclusion and the developmental standpoint, that having in place the sort of digital financial infrastructure of basically digital identity systems, financial accounts, interoperable payment systems, goes a long way in addressing some of those issues. But it doesn't address the real challenge of those that are still outside of the digital environment entirely. And though we're seeing some absolutely amazing progress in many countries, the availability of cheap smartphones everywhere in the world is really amazing. But there is definitely a difference in some countries which simply do not have the ability, the institutional capacity to build this sort of framework, or even to think about digitization strategies. And so one can basically think about an increasing digital divide between quite a large number of developed and developing countries that have the potential to put in place frameworks that can make a difference going forward, and those that are really close to the failed state category that don't. And I think going forward, that is potentially going to be a huge issue. Now, I'm going to kind of hit the others all together. And, from this standpoint of globalization versus fragmentation, how could it look? You could easily see blocks. You could easily see China, India, ASEAN, the US, EU, all sort of as separate quasi-isolated economic blocks. It doesn't look that different in some ways from the 1970s. What you then get is, depending on the relationships between those blocks, probably the need for financial centers or mechanisms to build systems to cross those borders, kind of like what we saw in the 70s, so long as the relationship doesn't get so bad that it ends up looking, instead of a sort of fragmented, more like a Cold War or even a hot war sort of perspective, in which case the ability to cross over those different blocks reduces as the relationships between individual pieces decrease as well. So if you have two blocks that are battling one another, do not get along, then clearly the possibility of interaction from an economic or financial side between those two is lessened. To the extent that you have blocks that are more or less kind of parallel operating, but leaving one another alone, the ability of different places to interconnect those becomes quite important. Now, wouldn't it be better, to Alessio's point, if when we see global problems, that we develop global solutions? And yes, that is my answer. And certainly I believe in taking every opportunity to re-emphasize the benefits of global approaches to global problems, but facing the reality that it's not going very well at the moment. But that doesn't mean that things could look better. Now, if I think of, from the standpoint of Pedro, it really does highlight this idea. It's interesting. If I think of where does the greatest pressure for global financial regulatory harmonization come from? 20 years ago, it was the academics. We came up with this idea and we loved it. Then it really became regulators. Regulators, the sort of Anne-Marie sort of Slaughter world, got together and really cooperated and came up with common approaches. Where's the driver today? It's the big financial institutions. The big financial institutions are actually, much more interested than the regulators. Most regulators aren't terribly interested. The big financial institutions would love to push things forward, but because of the geopolitics that we've talked about, it's becoming increasingly difficult. So, yeah, from a tech standpoint, it is lawyers who benefit in the context of fragmentation that avoids sort of the ultimate Cold War or hot war sort of scenarios. And so it's certainly possible. And technology makes it perhaps arguably easier to deal with. It already is the situation from a RegTech standpoint that you have more centralized functions combining IT and compliance, which then collect data from the global operations of firms, repackage that data for delivery to regulators around the world. And that's been something that we've seen expanding dramatically in India over the past decade, to the point where Goldman Sachs' second largest office is Bangalore. And it's not because of the investment banking work they're doing in Bangalore, it's because of their integrated back office compliance tech teams that support global operations. So it's doable. Certainly the big firms would prefer another direction, but it may well be that that is not on the cards. So we just have to kind of hope for a better outcome, but realize that certainly my central case remains fragmentation.
Thank you so much. That was terrific. I could listen to you for hours, I think. And there are some questions in the chat, which unfortunately we don't have time to cover now, but we've covered so much ground. I think we'll have enough food for thought for the next days. Thanks, Douglas, so much for joining us and for sharing your thoughts on this. For everybody, this event has been recorded, so we'll upload it to our website in case you would like to watch it again. And Douglas also kindly agreed to share his slides, so you can all look at this in the quiet moment again. Thanks so much again. Thanks to everybody for joining and for discussing. And we hope that you'll join us for any of our future events. Thank you so much, and take care.
Thanks very much, everybody. Take care, and really enjoyed the discussion.
Thanks. Thanks so much.